Most of the major averages finished in the red today. The Nasdaq, though, the lone outperformer, the index posted another record close. As you can see, only eked out a 7 basis point gain, though. Let's bring in EMJ Capital Founder and Portfolio Manager Eric Jackson. Eric, good to see you. Thanks so much for joining us.
Hey, Will.
One of the factors, despite that one record close for the Nasdaq, as we mentioned, that Mike was pointing to earlier, was the rolling over of the Russell intraday. That's something you've been keeping an eye on as well.
Yeah, Russell didn't have a good day today. I think that really as the Russell goes for the balance of this year, I expect so will the rest of the market. Despite the fact that we're at all-time highs on whatever index you're pointing to, there are a lot of stocks out there that really haven't participated in the rally this year, and the Russell has basically been treading water for the last 7 months. A lot of the growthier tech names, there are many that are still down on it. So hopefully we'll see some broadening out of participation amongst some of the smaller cap names. I know some of your previous guests, they talk about all the volatility that could take place on the downside. I tend to be a little bit more optimistic, and I'm kind of cautiously optimistic the market's going to continue to do well through the end of the year. But really, I think the key is going to be watching the Russell and how that does from here.
And so does that mean you want to be positioned in some of those smaller names as opposed to the mega caps like Apple and Microsoft, as we discussed earlier, that are at record highs already?
That's where I go fishing. Will, I'm trying to find names that I think can double or triple over the next 2-3 years. And while the FANG stocks are fantastic companies, I think they'll continue to do well. Obviously, when you're $2.5 trillion, it's hard to 2 or 3x from there. So I tend to look for names that are, maybe recent IPOs, names that have $5 to $10 billion market caps, where they have a strong underlying growth story. Maybe they aren't fully appreciated yet, and I think over the balance of time, they will get appreciated and have large upside to them.
So, Eric, if we're going fishing here, some names that you're catching, if you will.
Well, Morgan, my favorite long is a company called Upstart. It IPO'd last December. I was on the show in January, and I said then that I felt like Upstart could end up being the IPO of 2020, not Airbnb, not DoorDash, not Snowflake or one of these names. I'm sticking with that. The stock is basically 13x'd since the IPO. It's had a fantastic year. Hard to believe I'm going to argue that a stock that's 13x is still undervalued, but I think that's the case. This is an AI lending platform that partners with banks and credit unions, basically puts those banks and credit unions in touch with consumers who want a personal loan, and they're the matchmaker. They use their AI platform to do a better job with the FICO score, and then they get a referral fee for successfully putting folks together. And they've done a fantastic job. Last quarter, they reported that 71% of the time they're approving these transactions in a fully automated fashion. So their growth has been phenomenal. Their last quarter, they grew 1,000% over 2020 coming out of the pandemic. So even though the stock has, obviously exploded this year, a lot of the firms on Wall Street that cover Upstart, they're really caught off guard by this growth. Coming into this year, I went back and looked at the Goldman initiation report from January. They predicted Upstart was going to do $350 million in revenues this year, $480 million in revenues next year. They're going to do $750 million for this year, and that's probably sandbagged. And I think and Wall Street's only predicting that they're going to grow 33% into 2022. I don't think a company growing 1,000% is going to suddenly slow down to 33%. I think it's much more likely that they again double the revenues next year. They do something like 1.7 billion, and eventually Wall Street will sort of update their models for 2022. And when that happens, the only name in fintech that's growing this, there are no names in fintech, public companies that are growing this fast. The nearest one is Afterpay, which just got bought by Square, and that trades at 24 times next year's revenues. So for a name like Upstart, I think it should trade at least 30 times next year's revenues. If they did, this should be a $600 stock, not a $260 stock or whatever it is today. So I still think there is a lot of room to the upside for a name like this, especially as they move just from personal loans into auto loans, which is 6x the size of personal loans.